Hey guys, this is Scott Horne with Horne and Associates PC. And this video we're going to kind of chit-chat a bit about refinances, balloon payments, things of that nature in regards to mortgages and how those work. So if you like the video, guys, take a minute and like it, please. Make any comments below. We'll do our best to get back to you. And please come over and join our YouTube channel as well. Now, refinances and refinance expectations. So when you're doing a refinance or proposing one, of course, the question becomes, is this a traditional mortgage refinance, such as a homeowner, or is it an investor refinancing? So again, having the knowledge of basic mortgage rules and regulations is so important in our industry. And one of the first ones is a lender, in regard to an investor refi, is probably going to keep that refi around 80 cents on the dollar. In rare occasions, they might go 85, but 80% loan to value is probably your best rule of thumb, or below that in some regard. So keep that number in mind going in, and it's going to be based on the appraised value. Also, a lot of lenders out there, especially your small commercial banks today, are going to look at the length of time you've been in that house. Typically, lenders used to see a 1-year seasoning before they did a refinance on a property. Today, that time frame has been getting longer to 2 years. I've even seen 3 years where some of your smaller commercial banks want you to have owned that property before they'll do a refi where you might be pulling cash out of the deal. I don't think there's going to be a big issue doing what we call a rate and term refi, which is refinancing the rate of the mortgage, the actual principal balance, et cetera, as opposed to trying to pull cash out. We call that a cash out refi. So know what is available from your small commercial bank and what their rules and regulations are. Now you get into the traditional mortgage lending for investors. Again, they're going to cap you typically at 80 cents on the dollar. They probably want to see you have a 1-year seasoning minimum in the deal. And they're going to base that on the appraised value. And your DSCR lenders, your debt service credit ratio lenders, which is really hard money lenders in the traditional mortgage world, they're going to be the same for the most part. They're just going to have a few less requirements regarding your financials. If you go bank refi, they're going to see full financial statements, taxes, things of that nature, good credit. If you go traditional mortgage refinance, they're want the exact same thing. If you go DSCR refinance, they're going to have very limited requirements from a financial perspective. They're going to be looking mostly, though, at your credit score, which will determine your loan to value as well as your interest rate. And they're going to look, of course, at the income that property can produce, usually on a 1.2 debt to income ratio perspective, to ensure that the property supports the mortgage by at least a 20% factor. So knowing what to look at, what to expect, how to anticipate it, is really having knowledge of the industry. And how do you get that? You pick up the phone and you ask. Call your bank, ask them what the requirements are. Call your mortgage lender, ask them what their requirements are. Call your DSCR mortgage lender and get theirs. Track this stuff. Guys, it does change over time. You know, DSCR lenders, based on your credit, the property, the debt service, and those kind of items, they may provide loans from 65 up to 85% of the loan to value. In the mortgage world, maybe not quite so much. They're not looking at income. They're looking at you from a credit and a risk perspective. So understand those variations and differentiations on the refinance world. Now, one of the things that we see often is a balloon payment in a mortgage. And so what is that also? So you may enter into a loan, and let me go back to traditional lending here with, let's say, a small commercial bank. My commercial banks provide me typically a 15-year amortized loan. I could ask for 20 and get it, but I like to pay mine off a little bit sooner if possible. Typically, though, they'll give me a 3 or a 5-year term, meaning at the end of that 3 or 5-year term, there is a balloon, meaning the entire amount of the loan is due. Now, you'll see that in traditional mortgage lending as well as hard money lending from time to time, that they can put this balloon vehicle into a transaction. And all that means is at the end of the term, 3 years, 5 years, 7 years, 10 years, whatever it might be that was originally negotiated up front, the loan comes due and technically you owe the entire loan balance at that time. Does the lender have a legal obligation to renew and extend your term? No. Will they renew and extend your term? In almost every case, the answer is yes. But make sure you ask those questions. Your payment history will weigh into that. The value and condition of the property will weigh into it. Your relationship with that lender, if it's a commercial bank, will weigh into all those decisions out there. Looking into your traditional mortgage lending of standard mortgage lending and DSCR lending, that relationship's not important at all. What they care about is, again, your credit, your financials, and or the debt service ratios, etc., in that DSCR loan scenario. So again, when you're looking at refinances, you are negotiating your loan up front and there's a balloon vehicle built in. Know what those are. Know what they mean. Know what the term of those are. Understand what percentages the lenders will be refinancing and what the variable options are in the marketplace. What that does is helps you navigate your property and or your portfolio in an appropriate fashion as you go through the process of paying these loans down. And maybe you want to pay your debt down quite a bit and then go do a refinance and pull a large sum of cash out. Why would you do that? Because all that cash you pull out is tax-free. Now, yeah, you owe interest to the bank, and the bank just put a much larger loan on that property you had that may have been debt-free. But the cash you got is tax-free. And so that's beneficial. It allows you to buy a lot more houses maybe and to expand in that regard. So having a knowledge base of the industry, what's available from which type of lender it might be, how balloons work, what your obligations are or may not be, is so important to navigate the real estate investment world a little bit. So understand those, get a good grasp. It will help you greatly in the management of your property and or your portfolio. So guys, I hope you enjoyed the video. If you did, take a minute and like it, please. Don't forget to comment below. Please come join us on our YouTube channel. We'll see you guys next time.